Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about how to think like a whale. But before we get into that, I want to make a quick announcement. So last week we had announced that Polarity Digital Pro, our subscription service, would be launching soon, and I'm happy to announce we've now set an official launch date. That is June 13th, 1 week from today as I put out this video. And if you had seen our earlier announcement about this service coming up, basically it'll be a subscription service that'll allow you to access the website in addition to additional content and features, new models, new assets, things like that. And we're going to be doing a one-day sale on the 13th. So basically starting at 12 a.m. EST, and that'll run throughout the day where you can lock in a rate of $10 per month for the subscription service. After that, the price will go up and it'll never be that cheap again. And we think for the value that the site offers, that the models on the site offers, that the content on the site offers, that is an absolute bargain. So mark your calendars, June 13th is when that's coming up. Now, one of the models that you're going to get access to as part of Polarity Digital Pro, or those who subscribe to Polarity Digital Pro will get access to, is our forecast model. And I've talked about this one a bit before, both here on YouTube and on Twitter. But I wanted to talk about it again because I think it's something that allows you to really think like a whale, and that's why I'm titling the video that, or to think about so-called smart money. And so basically what the forecast model does, if you're not familiar, is that it estimates the probability that Bitcoin's price, in this case Bitcoin, or basically whatever asset it's applied to, in this case Bitcoin, the price of Bitcoin will be above where it is today 6 months in the future. So basically, how likely is it that the price will be up in 6 months versus not? And so what we're looking at here is the output. So the blue line here is the forecast model across time, and the white line is Bitcoin's price. And you see this model does a fantastic job of identifying these cycles, of identifying these times when it's a bull market, when being bullish makes sense, when the price of Bitcoin is very likely to be up 6 months in the future. And then it rides that wave all the way up. But then you'll notice as we get into the peaks, like for example here in 2017, the forecast model gets very bearish. It's going all the way down, saying there's only a 4% chance of upside in 6 months for Bitcoin, 6 months from this date here at the top. And indeed, then we went into the long bear market. And then it flipped bullish again, going into the run that happened in 2019, and then got more cautious as we went down, and then really got optimistic again, really got bullish again, going into the big run that happened in 2020, going into 2021. But then just as importantly, and I think this is one place where this model really distinguishes itself from a lot of other models that people were looking at the time, when we look at what happened going into this kind of double top that we got here in November, you'll see that the model was, starting to get a little bit more uncertain here, a bit more uncertain. Still was generally leaning bullish. In fact, funnily enough, it was actually right to do so. This is 6 months in the future from here to here. The market was up here relative to where it was down there, so it got that right. But then you'll notice that as we went into this run into November, the model was not really getting all that convinced. It wasn't even really cracking 50% probability of upside 6 months in the future, throughout this whole time. And then really as we got into that November high, it started getting very, very bearish. Estimating, as low here as a 4% chance of upside going into this bear market. And of course, it absolutely nailed it. It was absolutely right to be getting concerned at that point, because here we went down into the really nasty bear market. Then interestingly, you'll note that it's more recently been starting to climb back up again, and kind of really coinciding with the market starting to have its reversal off of the lows that we put in November of 2022. The model has absolutely nailed that move as well, and now it sits a bit higher. And the reason why I think that this allows you to think like a whale is for a couple different reasons. The first is that when it comes to markets, the way the smart money thinks about assets or investments or allocation is not black and white. It doesn't say, all right, now's the time to go all in or all out of an asset, to go max long or max short on an asset. It's in terms of probabilities. How likely is this asset to be up or down some amount of time in the future? In this case, for the model, we're looking at 6 months. And then based on that probability, that can help inform a decision. If you're at a point where the probability is extremely high, it becomes a lot easier to think that taking on a position in that asset makes sense if you're having a very high probability of upside not too long in the future. Whereas if the probability is quite low, then it doesn't really make any sense to be allocating to that asset. And if you're in the middle, that might be a point where you might want to just kind of sit tight and wait. Like, for example, this is a great example here in going kind of towards the end of this drawdown before the ultimate capitulation in 2018. The model's getting a little bit undecided. It was saying, well, the conditions could go either way. There's about a 50% chance, but not too, optimistic quite yet. And then, of course, things fell out. Now, of course, not too long after, the market did reverse. And so even if you had bought in here, it would not have really been that bad of an investment, seeing how the market rebounded so strongly. But the market, it was basically saying that was a neutral point. And so in those kind of neutral points, a wait and see approach can sometimes make sense before going off to the upside. Because basically what the model is saying is that it could have gone either way. That this collapse here didn't really need to happen, but that's just the way that things went. And really it was kind of estimating that about a 50-50 chance that things would go one way or the other. It broke to the downside, but the model, it was thinking that break to the upside could have happened there, just didn't end up playing out. And that's what I think is nice about this model, is it gives us those probabilities. There's nothing that's ever guaranteed in the market. There's never going to be that case where it's just obvious, 100% guaranteed that going in on an asset is a good idea at any given point in time. But there certainly are going to be times where the probabilities are stacked in your favor. And the idea is to be getting your money in when the probabilities are stacked in your favor, getting your money out when the probability is against you. And so that's with this model, nothing's ever guaranteed. Even when you're up, currently the model's up at around 87% chance of upside in 6 months. That's certainly a lot better than being down here at 4, but it's still not 100%, right? And that's where this can help us calibrate. That we know that nothing's ever going to be 100% certain, but we can then at least get an idea that kind of in that range between 0 and 100, where are we right now? And that's what this model allows you to do. Now, I also want to note that this is not just a model for Bitcoin. This also can be applied to any asset. We've applied it basically pro subscribers. When we launch our subscription service, we'll get access to this model for all the different assets that we support models for. So I think it'll be around 37 assets at launch, and you'll be able to see the forecast model for each and every one. I'm going to show you here Ethereum also, just so you can see how it acts here. And you can see that it also does a fantastic job, being bullish throughout this phase, really cooling off through the top here, going into this bear market, getting bullish again in this run up, getting kind of undecided in this sideways chop, and then saying, all right, here we go. It's very likely for upside to be coming through here. And then again, nailing this bear market, getting very cautious through here. And as Ethereum was putting in its all-time high back here in November of 21, the model was only estimating a 12% chance of upside at that point. Again, really forecasting this nasty bear market that we got, and now it's been starting to climb more bullish as well, just like we saw with Bitcoin. So obviously none of this financial advice, should make of these data as you will, but I really like this model because of the type of thinking that it makes, that it enables, that it makes easy. Because I think what a lot of people want to know in the crypto market is how likely is the market to be up or down sometime in the future. And that's the exact kind of information that this model is giving. And this is a model you're not going to find anywhere else. I have not seen anyone else in the crypto space have a model that's able to do what this model is doing. Give a probability estimate of upside at some point in the future, in this case, 6 months. And so this is something that Pro members, once we go ahead and launch the service, will have live access to for not just Bitcoin and Ethereum, but for, as I said, a bunch of other assets as well. All right, so to wrap up, just as another reminder, the Pro service will be launching on the 13th of this month, 13th of June. So mark your calendar if you're interested in getting in, especially if you're interested in getting in at that $10 a month rate. That's going to be just that day only on the 13th, and it'll never be that low again. And then, of course, remember to subscribe to the channel and follow us on Twitter. A lot of updates about our indicators and more over there.